First off, a lot of big words being used out west last night. They're changing the company's name. What can you tell us about the likely future of, I guess, what we called the We company?
Yeah, and it's been fascinating to watch sort of WeWork and the We company, as it's now known, spin this story as aggressively as possible to highlight the $47 billion post-money valuation. But in reality, what's happened is SoftBank has offered to buy out existing investors up to $1 billion worth at a valuation of $20 billion, and offered to inject another billion at a valuation of $42 billion. And if you include debt, that's how you get to $47 billion. So what you're seeing is Adam Neumann really spin the biggest number possible, make his company sound as exciting as possible. But in reality, what's happened is a potential $16 billion commitment from SoftBank, 10 of which would have been to buy out all the existing investors in WeWork and basically position them as the cornerstone investor in the company and buy the company lots of time to develop, really get reduced to a $2 billion investment of just working capital, one of which is intended to buy out other investors. So it's a huge, huge shift for what this company was expecting, what was being negotiated for several months behind closed doors. Yeah. And that's happened for a few reasons: the tech sell-off, reluctance from SoftBank investors in the Vision Fund to back this further, and so on. And so what you've had is a huge capital commitment get cut enormously, and that's a huge blow to the company, and it's really shifted plans for WeWork, and therefore you're starting to see language about the We company, 3 subsidiaries under a new top co, which gives them more optionality and prepares them potentially for an IPO of WeWork much sooner than they thought they were going to, because they now need money, because they are burning through capital at a very aggressive rate.
Yes, and let's be clear, and WeWork is kind of a cool thing, right? People get together, they pay a monthly fee, they've got free beer Fridays. It's all kind of hip, but the bottom line is this, Arash, and if I'm wrong, please tell me. WeWork, which, by the way, we've broken news on last year, is a real estate company. It's effectively a REIT. They buy buildings. You can put people in them doing whatever they want, but at the heart of it, it's a real estate company. It has bonds, and those bonds are saying investors are not that optimistic.
Absolutely. And, you know, it's not dissimilar to the Tesla story or all these very hyped companies that we see in the current market. If the companies just focus on making money, which is what most companies do, and growing their sales, which is what really good companies do and make money, then investors love it. But what you're having at WeWork is a top-line sales growth that is growing and moving quite quickly, but huge losses that are expanding. In the first 3 quarters of 2018, they lost $1.2 billion. That's cash leaving the company. Now, the good thing for them is they are capitalized and they have roughly $6 billion in cash on hand at the moment, according to our reporting, so they can weather this storm. But like you said, it's a real estate play, not a tech play. And so once that reality really sets in, that's a different state of play. In the UK, there's a company called IWG, which used to be known as Regis. It has a market value of 2 billion sterling. That is a fraction of what WeWork is valued right now, and it is roughly the same business model, just minus the hype.
Yes, I knew you were going to mention that. It's in your story, by the way, up on the FT.com right now, but I'm glad you mentioned it, because our viewers here, they hear the Regis commercials. You know, start an office and you can have a shared phone number, but Regis is a little more plain. WeWork has tried to sex it up, if you will, right? You got all the kind of the hip stuff and the free beer Fridays and all that, but at the end of the day, this is not a new business model, is it? I mean, IWG has been around for 3 decades, and by the way, 15 years ago, filed for bankruptcy.
Exactly. Now, and if you remember, a couple of the big companies that have IPO'd in recent years from the tech space have tried to position themselves as more than the thing they started out as, right? So if you remember, Snapchat was called Snapchat, and then it became Snap, which had 2 units, Snapchat, and the goggle, the virtual reality kind of the goggles that let you snap while you wear them. And so they tried to pivot into a new product line so that they said to investors, hey, look, we're more than just this messaging app. Now you're seeing the same thing at WeWork, which is now the We company. They have We Live and We Grow. We live for co-living and We Grow for education and coding. So they're trying to show to investors and the market with this messaging and this campaign, which is an aggressive press campaign this week, that they are more than just a real estate company. But ultimately, their success and failure relies on filling up those office spaces and making sure they're making money from leases that they're taking out long and renting short.